Hey guys, welcome to the third installment of our short series on crypto trading for beginners. Today, I'm going to focus on the MACD, which if you read the name and you look at the pictures of it, you might immediately think, oh, this is too complicated for me. But actually, once you break it down, it's not too hard to understand. MACD stands for Moving Average Convergence Divergence. Yeah, for some reason it has to sound really complicated, but let me tell you, convergence just means this: things are getting closer together. And divergence means this: things are getting further apart. The most simple explanation of the MACD is that it tracks two different moving averages and how they look compared to each other. Mostly tracking, are they getting closer, are they getting further apart, and are they crossing over to the other direction? Now, the how and why this happens and what you want to look for, that's where we go into the details, which I'll do in this video, again in an introductory way. Just want to let you know what the MACD is and some basic concepts of how you might use it when trading. So, let's get started. Wait, before we start, don't forget to like, comment, subscribe, and share this video with your friends. Also, I'll pick the best 3 comments to send a $15 trading bonus to. So, you want to know how to make a good comment? Just tell me what you do or don't like about this video, what you'd like to see in the future, how we can improve, what you're looking to learn. Any sort of this feedback really helps out a lot because I want to make content that's useful for you. So please let me know in the comments and you might just get that $15 trading bonus. All right, let's get started. Trend following strategies have historically worked quite well at the crypto markets, specifically with Bitcoin. And the MACD is one of the top trend following indicators. So let's dig in. The MACD plots the relationship between the 12-period and the 26-period moving average. It then applies a 9-period moving average to this value. The convergence and divergence part refers to when the averages are moving closer and further apart, converging and diverging. The 9-period moving average is used as the signal line. By checking the line that the 9-period moving average represents, we can get buy and sell signals depending on if this line is crossing above or below the MACD. Now I'm going to put up an image so you can see what I'm talking about while I give you a little explanation about the MACD. In this image we have a Bitcoin chart with a 12-period EMA plotted in red and a 26-period EMA plotted in black. At the bottom of this chart you can see the MACD indicator. The blue line is the MACD line, which is the 26 EMA minus the 12 EMA. That's the 26 exponential moving average minus the 12 exponential moving average. If you remember our explanation of moving averages, this number ahead of them indicates how many periods that we're tracking to get the average of. So the 26 EMA, if we're on a one-day chart, means we're tracking the average of the 26 days leading up to the point that we're plotting. And for the 12 EMA, we're tracking in the 12 days before the point we're plotting. This value is then plotted to give us a representation of how far the moving averages are spaced apart. So if you see here, you can see sometimes they're further apart, sometimes they're closer together. The idea is that a trend that's picking up in momentum will result in the moving averages diverging from each other, getting further apart. And the opposite is true for a trend that is losing steam. They'll get closer together or converge. If you look at the bottom part, you can find a golden line and a blue line. The golden line is that signal line plotted by the 9-period EMA, which gives us an idea of what the trend has been for the MACD values. You can also see that there's a histogram plotted on the chart at the bottom. This histogram represents the distance between the MACD line, which again is blue, and the signal line, which again is gold. The convergence and divergence between the MACD and the signal line are clearly seen in the histogram and can be used to help traders identify bullish or bearish momentum. Also, when looking at this bottom part of the chart, this straight line in the middle, you can see it's at 0, so we're going to refer to that as the 0 line. Now let's look at some of the main ways the MACD is used when analyzing crypto charts. Its first use is it can give us a general direction of the crypto market. In this way, it's very simple to use. If the market is overall bullish, then the MACD is going to spend most of its time above the 0 line. Whereas if the market is bearish, trending downwards, then the MACD is going to spend most of its time below the 0 line. This means that the MACD can kind of give us a higher up view of what the general market direction is. If we only look at the simple crypto chart with no indicators, then we'll always think that it's going the direction it looks like it's going. If we have the MACD and we see that the chart's moving some direction, but the MACD indicates otherwise, then we'll know that it's not necessarily following the general direction, and that indication might be less strong. So the MACD can kind of help us pull out, look at the broader picture over time. The MACD can also be used as a trend following tool, especially in higher time frame environments. The reason for this is if we do really small time frame, then it's not nearly as reliable, as often the signals in low time frame are much more random, and the output of a MACD indicator doesn't tell you as much as a longer time frame. So if we were doing 5-minute candles, then that 26 moving average would just be 26 minutes. Whereas if we do 1-day candles, again, that would mean that 26 is 26 days, and this gives us a bit more stability in our predictions. The MACD is also not nearly as reliable of an indicator in ranging environments, where the price is sort of going up and down a lot and generally staying at about the same price rather than having any longer term trend. The MACD helps a lot more in the longer bullish or bearish trends. So let me pull up another picture and give you another explanation. So if we're looking at this daily crypto chart and we see that it's spent a lot of time below the zero line, and that the price is now moving upwards, and that the signal line has crossed from under the MACD line to above, and both are trading above the zero line, then this may be a good signal to long that asset, because it signals that the trend is moving upwards. On the other hand, if the price has been in a sustained uptrend and has formed some type of topping pattern, and the signal line is consistently maintaining position below the MACD line, it may be time to sell the position or consider shorting the market. During uptrends, this simple crossover, along with some other substantiating evidence of a topping pattern, are usually good to act on alone without waiting for it to move below the zero line. This is because reversals to the downside generally happen rather quickly, and so you can't really wait for that bigger indicator for it to go below the zero line, or you're probably going to be too late. But we can dig into that more in later videos where we go deeper into these strategies. If this video series is your first introduction to crypto trading and I tell you you need other substantiating evidence, I can see that might be frustrating because we haven't talked about it yet, but we have to build on everything. So that substantiating evidence can come later when we talk about some other patterns. But first, I'm covering these main things so you can get an idea of what they are, understand sort of how to look at them and what they might mean. Then we can add in the other indicators so that you can use them along with this so that you can get stronger evidence for your trades. The last really common method of using the MACD that we'll talk about today is using it as an indicator similar to the RSI, which we're going to talk about in the next video. I'm about to use the term higher highs and lower highs, which sounds a little bit ridiculous with no explanation. Any high on a chart is after it's gone up and whenever it starts going down. That's a high, like a peak. So a higher high is when you have one peak here and then the next peak is even taller than it. A lower high is when you have a peak here and then the next peak is lower than that. So that's a lower high. All right, with that explanation done, let me continue. If we see a trend that has higher highs in price action when only looking at the candles, but lower highs in the MACD, like here and here, then this can provide a strong case for divergence in momentum, which might mean that the trend is weakening. So let me pull up a picture again and continue to explain this while you get a nice visual. In this example, we can see that although the price made a higher high, the MACD indicator made a lower high. Again, this is a sign that buyers in this case might be losing momentum. This sign is generally not enough to act on alone, but it's a good indication to check other evidence to verify if the trend does seem to really be weakening. Many crypto traders use this with other strong evidence to make a case for taking profit, opening a position in the opposite direction, or if nothing else, just keeping a closer eye on the trend. So like I said, this alone might not be enough to take any direct action, but once you see it happen, it can be a good indicator to check some other indicators and see how strong this indicator is. And lastly, we should answer the very relevant question, is the MACD a good indicator? Essentially, the answer is yes, but only if we keep in mind that it should be used along with other indicators. As you learn more about different indicators, you'll be able to use them together to get a stronger sense of what's going to happen. This basically means that the MACD is like any other indicator that's based on price. It's a lagging indicator that gives us a smoothed out representation of the current trend and momentum. If you use only the MACD indicator, then it's going to give you frequent false signals and probably not going to work that well for trading if you are only using the MACD indicator. However, like I already said, if you combine it with some other indicators, then it can be super valuable. The most common method of using the MACD is actually partnering it with the RSI, which we're going to talk about in the next video. So get ready, all these strategies build on each other. Remember to keep experimenting and seeing what kind of feedback you get from your strategies. And as you continue learning more, remember that all these tools can work together with the proper application. So as you're learning these, don't forget to go and back test them, meaning go look at previous price action, try to use these strategies on things that already happened to see if they would have worked in the past. That'll give you an idea if you're using them correctly, how often they work. And then aside from back testing, you can also use a trading simulator, as we also have on Phemex, so that as you're getting started learning about trading, you don't have to put in your actual money. You can just trade with some fake money to see how you would have done if you had an actual money. That way you can make as many mistakes as you want, and as we all know, you need to make mistakes to learn from your mistakes. So simulated trading is great for that. Then, once you've learned enough and your simulated trading is going well and you're generally in profit, then you can start to do some trading with real money. But remember to start small, and even once you go larger, never trade more than you can afford to lose. But that's probably all in the future if you're watching these beginner videos. But you can go ahead and start testing out these concepts we've already talked about. Make sure you really get them down, know what they're all about, get it in your head how they work. Then continue learning the other ones and making sure you know how those work. And over time, you'll build up your knowledge and you'll be able to use them together, make better and better trades, and really get in there and start trading. Anyway, I've talked too much in this closing part of the video. I hope this introduction to the MACD indicator was helpful, and stay tuned next week when we talk about the RSI. Thanks for watching. See you next time.